Hey everybody, it's Ken Perry with Broker Knowledge Group. This week what I thought we'd talk about is one of the more pressing issues in the mortgage industry right now, which is qualified residential mortgage. I have been saying for over a year that compensation changes that we just dealt with are nothing compared to Dodd Frank. And it looks like I'm right. So Dodd Frank passed last year. All of the rulemaking goes into effect this year. And the Bureau, that new huge Bureau, takes power July 21st of this year. So qualified residential mortgage is within Dodd Frank, and it's what's being debated right now, and it's getting really interesting. So I want to break it down for you in a way that you'll understand exactly what's going on. Okay, a qualified residential mortgage was the creation of this perfect loan. And so basically, if you do this perfect loan, then you don't have a lot of requirements that go along with it. Well, in defining the perfect loan, what Congress did is they said, if you want to be a qualified residential mortgage, then you have to do a loan that is full doc, not negatively amortizing. Most balloons don't really fit into this picture. And then they said it has to fit within a certain debt ratio, but they decided to leave that up to rule making, which we'll talk about in a second. And then they said also points and fees that are less than 3%. Well, we're dealing with that right now as well. So they said if you fit in that little box and you're a qualified residential mortgage, what that means is you do not have to retain 5% of your own money for the risk if it happens to default. So obviously you want to be a qualified residential mortgage. The thought process is most people doing loans outside of that box will either stop doing loans outside of that box or heavily increase the rates and fees to those people. And so when Congress passed that last year, it sounded, like it was going to start, obviously tightening our loan programs, but it looked like it may do a little overreaching. Well, the overreach became huge this year because the federal agencies that regulate Dodd-Frank got together before they become the Bureau. They all got together and said, what should we do with this qualified residential mortgage? Well, they gave us a debt ratio of that QRM. To be inside that box, your debt ratio needs to be the same as the gas mileage in my Mini Cooper, 2836. A 36% back-end debt ratio or you don't qualify. Well, there's a lot of people over 36%, especially if you look at how we're looking at income and how restrictive we're being right now. So a 28% top end, 36% back end ratio is what you need to be fitting within this box. What the federal agencies did in addition to that, and this is what's gotten really controversial, is that they put in there as well a down payment requirement. So on a purchase, you need 20% down to be this safe type of loan. On a refi, it's a 75% loan to value, and on a cash out refi, it's 70% loan to value. So the thought process is everybody will get out of doing those loans. Now, if you take a step back, it sounds really cool, right? If everybody has 20% down, then, we live in this area of no default. And I kind of agree with that. It would definitely decrease default because nobody would qualify for a mortgage. So there wouldn't be anybody defaulting on them. So it got really ugly this last week. And here's what happened this week. This week, Congress is stepping up and saying, hey, federal agencies, what you're doing is wrong. So Congress sent a message to them. In fact, this Friday, there will be a letter going to the federal agencies that says, get the down payment requirement out of there and loosen up those debt ratio requirements because otherwise it will limit financing. By the way, those four senators that are giving that out, Landrieu, Hagan, Shaheen and Isefson. So those are the four senators who have actually written a letter. One of those senators is from North Carolina, which I think is interesting because that's where the Center for Responsible Lending is. Center for Responsible Lending is a consumer activist group that is actually teamed with the Mortgage Bankers Association and on the same side as the Mortgage Brokers Association. They're all fighting together against the federal agencies. So let's get this straight. Congress hates the new rules. The CRL hates the new rules, Center for Responsible Lending. MBA hates the new rules. Mortgage brokers hate the new rules. Everybody hates the new rules except for the agencies. So here's what the agencies did. Just this week, the agencies lifted their requirement that on rulemaking. What I mean by that is you could send letters in and fight your case. We can. They've extended that to August. So what was going to be stopping this week, which is our feedback to them, they're opening up all the way to August. What that does is it tells me that there's a chance they're going to lift those debt ratio requirements up, make them either more liberal or make them completely out, and then we'll probably see a going away of the LTV requirements. Hope I didn't talk too fast on all of that, but basically they're trying to make massive changes, and luckily the economy is such that people are starting to say, do not limit financing. That's huge for us. In fact, just today, and this is Tuesday when I'm filming this, so when you're watching this, this was yesterday, the Bernanke came out and said apparently we're not out of the recession completely and the recovery isn't exactly speeding up, which is, I guess, obvious to the rest of us, but apparently the Fed's just figured it out. All right, so all of that hopefully wasn't just fired at you too quickly. Just know the QRM is a safe mortgage, and they're still going to be debating the definition for a really long time. But the good news is everybody is on our side. So hopefully we do not have the restrictive guidelines. It's nothing that I would stress out too much. If I were you, we're still waiting to find out what Senator Wiener has to say about it, but we're pretty sure he's going to put something on Twitter this afternoon of his position. So anyway, have a great day, you guys. Thanks for listening, and we'll catch you next Wednesday.